Here's the immovable fact. Since the Trump administration has gotten into trouble, we've enjoyed a weak dollar policy. What does that weak dollar signal?
Well, I think a weak dollar policy plays into the hands not only of the administration in terms of allowing manufacturing to be more competitive, but it plays into the hands of the Federal Reserve. The Fed, Tom, wants 2% inflation. They mentioned that in their statement today, very significantly. They basically said the committee is monitoring inflation developments closely. And so, they want a 2% target. They want it to be hit as quickly as possible, and a weaker dollar plays right into their hands. There have been estimations that a 5 to 10% decline in the dollar, and we've seen a 7% decline since the top, reduces or increases inflation by 0.1 or 0.2% a year for the next several years. And so, it's very much of a favorable development for both sides of Fed and policymakers.
I want to emphasize, Bill, if I went down to Duke University right now and had to do Chart 101 for the students at Duke, what I'd be talking about is a perfect dollar chart. Bring it up, Tanya, if you would. This is the gorgeous Bloomberg Dollar Index. This is actually very good mathematics in terms of a blended dollar rate in all those little circles. For those of you on radio, it is the mother of all elegant charts. And now we crater down even more into weak dollar. What does that weak dollar mean for other central banks? Is this a way for the Fed to compete with rate increases, or at least a discourse of rate increases at other banks?
Yeah, I think it is. It's probably a stretch, Tom, to say that there's a currency war going on, but certainly central banks are, well attuned to their currency levels. The Fed basically ranks it 4th or 5th down their list, but I know that they're looking at the currencies I just mentioned, and at the ECB with Draghi, they specifically look at it in terms of a strong or a weak euro. You mentioned a strong euro in the last 10, 15 minutes. That's really not in the favor of the ECB and the stimulation that they want to see in terms of reaching their own inflationary target of 2%. And so do we have a war going on? I wouldn't call it a war, but it's certainly a skirmish, and the BOJ as well is in the fight, so to speak, because they've kept their policy firm at the 0% in terms of the 10-year interest rate, and they don't seem to be moving off of it at all. So yeah, central banks are very much concerned with reaching their own inflationary targets by the basis of a lower currency.